Friday, June 13th. Market analysis, Stan Ehrlich. Good morning, 9:49 California time, and we have a wild and crazy day. Stock market indexes got slammed at around 5 p.m. California time yesterday, apparently because of the Israeli situation, and have recovered quite a bit. Oh, by the way, I always start out with stock market indexes. I go to futures, and I've got about 4 stocks that I'm following at the moment, plus an announcement, which I made yesterday as well. First of all, don't mention this that often. I do tutoring. If you're interested in learning from a 53-year veteran technical analyst, past president, FX firm, hedge fund manager, you name it, 5 market letters, CNBC, I'm available. And there will be no YouTube on Monday, Tuesday, Wednesday, Thursday, or for Friday until Sunday of next weekend. Not this weekend, but a week from now, plus a few days. I'm going to be spending some time with the family. So I will recap what's happened last week on Sunday, a week from this coming Sunday. All right. Sorry, I'm leaving town at this particular juncture in the market, but that's the way it is, pre-planned. S&P 500 E-mini dropped down like a rock in a matter of less than 10 minutes, I think, most of the break. And then a little while later, got down to almost touching exactly my first minor support level, and has now bounced back so that we are only about 3 points lower, 3.32 for the E-mini, 3.2 if you're talking SPY. Lower on the day at the moment, which is back up where it has been trying to top out for the last few days, in my opinion. And it still is, my opinion. So the break we had was fast, furious, and step number 1 is pretty much over. This bounce is a little better than I would have expected, getting all the way back to only, 3 points lower when we were down about 11. So I think we're stalling out here. I think we're about ready to turn down. And that statement basically is the same for the other indexes. So this is the 1-minute chart on the E-mini. Came back up to a little shelf of resistance. I like where it stopped so far, although I did thought it was going to stop around the lows of yesterday, which it tried to, but it didn't succeed at all. Spider, overbought conditions, didn't close lower yesterday, but we did have a doji, but there's no reversal. I didn't get any bearish engulfing ER sell signals like we have in platinum, and watch out, people, we've got some more in other markets today as well. So we're dropping down. I think we're not finished. I think we're going to come down in the spider to around 585, and that could very well be next week. But soon. Then there's the gap to close, and now I'm talking about coming down to 567, and I'm not necessarily finished. Before this particular bear move or fairly large technical bearish correction is over, I'm thinking we can come down to, say, 550-ish. And we got the 1-minute chart, which the spider opened 6:30 California time lower, but it didn't gap below yesterday's low, so there was no gap to close. I think the QQQ did have one, but it's closed now. The rally, it came back up to a little resistance. Nothing particularly profound about the rally high so far, so I'm not super sure that, and then whenever you are super sure about something, you're always wrong. So this is okay, but I just need to see it slip, and the more the better, the faster. Well, not necessarily that fast. Okay, now we got overbought on the QQQ. Got extremely close to major resistance levels, which of course was the 2 to 3 highs that we saw back in December and January, February. So overbought conditions, no particular reversal. We did have one a few days ago, and it didn't work. And we had one a couple of weeks earlier. It didn't work. Well, that one did work. It worked for a couple of days and was profitable. That one just plain didn't get a chance to make any money, point blank, except for the scalp trade I think the ER1 scalp actually turned a profit, and that was the scalp on June 5th. I'm pretty sure it did. All right. Anyway, now we're starting, in my opinion, the break I've been looking for. But I need to get at least a bit lower than we are now or more in order to feel a lot stronger about that opinion. But look, these are new lows from anywhere from 5 days to 7 days that we came down to suddenly last evening. And then we just simply rebounded. So I think we're on the way down, stair-stepping our way down. Next chart is the 1 minute for the QQQ, which did gap a little bit below yesterday's lows on the opening this morning. Make those lows 1, 2, 3, 4, 5 day worth of new lows. Came back to, generally speaking, the price ranges that it's been having a lot of problem at an hour or so ago and is slipping. So this, could be the beginning of the next significant leg down. Next, the first one was at 11 point plus a few break yesterday evening. Now, NASDAQ, daily data, same story. No reversal at the top, unfortunately. Premature reversals. But I often say these reversals are hopefully the highest high or lowest low for moves, and they often are. Just keep your eye out for red on top or green on the very, very low day or high day. And lots of times they are extremely close and part of the topping or bottoming out price range time frame. But not the greatest example here. Nevertheless, closing below today's lows is going to make new lows for at least 7 days instead of 5 and perpetuate the expectation of it going south more. NASDAQ, big break on the 1 minute chart. Came back on the bounce, a reasonable level. Started to slip off, bouncing momentarily a little. Next, Dow, YM, momentarily at a little resistance right now. The lows of yesterday, and this has made new lows for 7 days. So a few more. That's a week and a half, basically. And it looks like it's going to be a new low close for the prior 5 days by a chunk, and maybe even more than that. You see, when it starts creeping up slowly like this, and I told you on Wednesday, new high for the whole trend, but it has to stay above the previous rally highs in order to be good, in my book. It didn't. Yesterday, nothing really significant happened, and kaboom today. We all know the reason why, but I told you this could happen before it happened. End of story. Next is the 1 minute chart on the Dow, bouncing back a little bit at the moment. Even if it makes some minor new highs for the last few hours, that really is not going to change my opinion. Next, Russell. I'd have to have a whopping big rally and probably close higher on the day in order to cause me to stumble, and I won't be able to say anything about it. Remember, no market letter Monday, Tuesday, Wednesday, Thursday, but Friday's analysis for all of the week, as a matter of fact, I will do on Sunday, a week and a couple of days from now. Big break. Russell came down to some support, broke it, still above the previous bear trend line, which has proven to be pretty profound. Already bounced off of it once. This is not quite as close as I'd like, but it's a heck of a good bounce. We not only went down to the support level, but we dropped below it a little bit. Now we're back to the high of the support level, or support and resistance, depending upon whether you're going up to it or coming down to it, support resistance. So momentarily it's stuck at the top. And again, just simply overbought conditions, bumping against another resistance area, pretty profound one. That's why I have it red. I'm looking for lower levels. What can I say? You know where to go at these zones, gap closures, stuff like that. Next, don't think this is going to go anywhere. And bonds. Now, wait a minute. This is not what I want. We have an outside down day, bearish engulfing, normally a Japanese sell signal, Japanese candlestick sell signal, and I agree with that. But I treat it a different way when you are overbought or oversold. We did not get overbought. We came relatively close, but it has to be 75 on my custom RSI or higher in order to turn this bar red, which it would have, like that one, like these other red ones, and a couple in here. And if it got oversold and had a bullish engulfing, it would be green like that bottom, like that beginning of a rally. That one didn't work. This one rallied a little. That is the low day for months. And a couple of green ones lately. I should put a little circle around those, but I didn't do it yet. So I'm now expecting it to come down to about 111.30. Let's call it 112 and a few ticks. Real quick. If that's broken, then you've got the trend line to work with. Then you've got previous lows to work with. And that is the low that happened on 522. Below that, below 109.24-ish. Yeah, 109.21 maybe. It could drop off all the way to the lows that we saw in October 23, a year and a half ago. That's 106.25-ish. Yeah, call it a little below 107. So it's not that I'm turning bearish yet, but I do expect a challenge of support. And depending upon what happens there, I would have to turn bearish, maybe a little late, but, you know, that's the way it is. 10-year notes doing the same damn thing. Little double top in a resistance area, bearish engulfing, looking a little bit worse, frankly, a little more bearish than bonds at the moment. Come down to support 109, a little below 110. See what happens then. Breaks below it. You're probably going to drop all the way down to about the low 108 area, 108.08 or something. Now, gold. Sorry, crude oil, heating oil, unleaded. We got the energies, natural gas. So, big, huge rally on crude. Middle East. Challenged previous highs almost exactly, not quite. Topped out with a vengeance, super quick. Pulled all the way back down to where we are at the moment, 72.12-ish. Yep, 72.20, 3, 1. And that is a previous high, just a little lower. Support at the moment. There's no gaps to close. This looks a lot like a blow-off top. What would cause me to scream bloody murder? It's more likely to be a blow-off top is closing below this old high back here on April 2nd. And that is if it closes below 71.16, I would be a little bit more aggressive about bearish thinking and possible results of that. On the other hand, if it closes above that number, we could have more of a rally. Now, we barely got up to, I think we may have had an overbought condition. 93.90 is the 90. Wait a minute. 95. Yep, 95.98 it looks like. And that was yesterday. What about today? That's the one I want. It doesn't seem to be giving me my numbers, so I want a second here. Yeah, it looks like a 93.90-ish. So I'm surprised that's not true. Okay. Yep. Way up at 93, 94 almost. Super overbought is my point here. Remember, anytime we get up in the 90s, I start screaming bloody murder. This doesn't happen but once, 2, 3, 4 times a year. And almost every time, check it out for yourself. Don't believe me. You end up with a top maybe to the same day that it got up into the 90s or within a very short amount of time. Most of the time, it turns down. Prove it to yourself. Let me rescale this. Okay, that's my answer. So I think it's topping out because of the blow-off top and the double top looking chart. Very, it might take some more strength, get back up, challenge the highs, and then finally turn down. Or this is pretty much maybe it. Can't really be super adamant about it at the moment. What do we got for natural gas? It just doesn't care. Natural gas is having a doji. It's going sideways today, very slightly higher on the day. Remember, this seems to be a double shoulder, head and shoulder top formation, which started essentially back on December 30th. Let's call it for 2025, the whole half of the year so far, January through now. it should drop below the neckline real soon. I'm thinking next week. And if that's true and it does not go back up above the neckline after that, then it should be on its way down to maybe as low as 1.320 or more. Very bearish formation, intermediate to longer term. Remember, bear markets go down faster than bull markets go up. So 3 months, 6 months at the most. Okay, watch out for the breakout. Heating oil. Another rocket to the moon like crude. Got up to and is still at the moment, previous important highs that I put a resistance level line at. Now, it went through it and stopped at a little bit of an ambiguous price, but could not and did not make a new high since the top that was way back here on January 20th of this year. So you've got that to work with for resistance. Pardon me. And that's a little higher than we've reached so far today. If it stays where it is or comes down a little bit, then I've got to say something about, not closing above previous important highs, which would normally apply to the highest high. But look, we got a couple right in there that are real good, and they look like they are important, and it's having a lot of trouble at it right now. So slipping lower than it is at the moment is going to be a little bit more bearish, in my opinion. Blow off top, maybe. RSI up very, very high, 88-ish. Can't scream bloody murder, but I was getting close, of course. I think it's topping out. Okay, what do we got for gold, silver, platinum? So watch out for the metals here. Mostly, I think I've got bearish commentary. Overbought almost in gold. Almost at resistance, maybe a little bit higher. And there's another shot up to the highest highs. But if it does that relatively quickly, which it looks like it could, it will be overbought at resistance areas or some combination thereof and turn down. Maybe today's a high day, can't tell, but maybe early next week. Next chart is silver. Overbought, it has been. It did slip off for 2-3 days sharply. Yesterday's low was below the low of the previous 4 days while it climbed. Didn't stay there. Yes, today it came up a bit more, got oversold again, and is now around unchanged, just a little higher. Looks like it could easily start to slip off again, and if it starts closing below yesterday's lows, obviously that's going to throw a little water on the bullish flames and keep it coming down more. I think it could get down to 33.65-ish without too much trouble. Week or two. Next, we've got platinum. And this is a different chart that I have normally not shown. I am going back 9 years on daily data. On the very far left side, we got June of 14. Okay, 10, 11 years. But the point is, this big yellow zone, a low of which is around 1166 to the high, which is around 1374, very wide range, has in the past decade stopped rallies in 2016, stopped rallies in 2021 and 2022. I'm not even mentioning the small rallies that got to the bottom of the trading range in multiple different years I haven't mentioned yet. But look how many times it gets up above 1168-ish and either has some more strength for a short while, and that was 2016 and 2021. But after that, they all started to go right back down, and sometimes huge amounts below that resistance zone. And it's a fairly wide zone. What happened just now? Watch. Same yellow zone we just had today. We are having today a large bearish engulfing ER sell signal, which is very overbought at 93, screaming bloody murder, like I started talking about bloody murder the last couple of days in platinum. So here it is, ladies and gentlemen, exactly what I wanted to find. I'm turning bearish, obviously. We have a day trade ER1 scalp either having made some money or still on the books at the moment, I don't have it turned on at the moment, so you can't see it. Doing very well. Lots of downside potential here. I'm looking for 1091 easily. Now, there's a chance you could bounce a little bit off of 1166 and 1153 zone, a couple of support lines, but that's only going to be a bounce. And then lower lows, I would expect to see maybe as low as 1090 next week or within 2 or 3 weeks. And if it takes that long, maybe a bounce or two in the interim. But if it takes only 1 week, it's probably going to drop pretty quickly, steadily. Next chart is copper. And we have a bearish engulfing here. Not overbought, so we don't have red. Period. We had red on this top. It was overbought. Gave it a classic, just like platinum today. Overbought turned red, just like platinum today. Oversold and an outside up day or bullish engulfing green at the bottom. Don't ignore these things. So, and they don't always work. I don't want to imply that they're 100% guaranteed. Past performance is not indicative of future results, and hypothetical terms have some inherent limitations. Thank you, CFTC and NFA, etc. So, always use protective stops and plan in advance for the worst and hope for the best. But I don't trade on hope, or what we like to call hopium. Don't do that. Plan. So, bearish engulfing. Bearish now, looking for lower levels, just like the other metals. Soybean oil, soybean meal, what the heck is going on? All of a sudden, I've got significant strength, and watch what happened with soybean oil in a moment. I haven't seen limit up in a long time. I'm going to have to say years, if not longer. Wheat, okay, back 3.5 years ago on the beginning of the war. This is substantial, 25 cents plus higher on the day, close to the high, holding. It's been making new highs today for the last 2 or 3 weeks and getting very close all of a sudden to resistance levels. If it closes over 1082, let's call it, I think it'll challenge the neckline on this head and shoulder bottom, which I'm now going to start talking about again, because now I got some faith in the long side of the market. It's just not soybeans. Look at soybean meal. Soybean oil. How do I know this is limit up besides knowing that it's $3? Also, I'll do this, and I rarely do this. I'm going to change to a 1-minute chart. Look at this. This morning at 6:31 a.m. California time, all of a sudden some kind of news came out, and it slammed limit up. That's the sign they can't go any further. It had a little trading going on during that 1 minute, and then started to slip from limit up down. Didn't stay down. Came right back up. Very classic super bullish type of activity, and it's now limit up locked. That is the current tick. If you can call it a tick, they may not be trading, but 1 contract a minute or less. 0 maybe. That means there's many, many more buyers than sellers. Well, actually, the rule would be 1 more buyer than seller, and you'd get stuck at limit up, but that's rarely the case. Lock limit up is what we call it. 50.62, maximum amount. Now, they may expand the limit to a larger, maybe 150% of normal on Monday. I don't think so. I think it has to go limit 3 days in a row in the same direction, and then they expand the limit. So I think it's still going to be 3.00 on Monday as well, assuming it stays limit up today. This is very, very rare. Let me squish this back. Now I'm going to go back to the daily chart again. Pardon me. Where are we? 50.61. We are apparently going to close there because it's being locked limit up. That is a new high and a new high close for at least 3 weeks. Looks like closer to 24. Assuming it's going to gap on Monday, it could be challenging the highest high we have had ever since November of 23. That means all of 24, and of course December of 23, and the first half of 25, a year and a half plus. If we can get above the high we made only a month or so ago. Yeah, a month ago on the 14th. Now that was a failure, breaking a neckline on a head and shoulder bottom formation. I've long since, weeks ago, erased the markings, but this was supposedly the last shoulder low, then that shoulder, then the head of the formation is always the lowest low for a head and shoulder bottom. And that was the previous inside shoulder, and then you had that shoulder being the very first. So it was a very big formation. All of it looked good. Breakout occurred right there, but it got overbought. Not unusual on a breakout of a head and shoulder bottom, but it right away failed, dropped below, closed below the neckline. That's a major no-no. And look at what happened. It went all the way down to oversold, and now, wow, I don't know what's causing this, but this could be very bullish. Soybeans are doing something interesting. Soybean oil is doing something very interesting. Soybean meal doesn't care yet. So it made a new low for a couple of weeks, challenged major historical support levels. That could be important. Let's draw a little line here. I haven't got one. It's time to do that. Across the lows, and it's going to slant upwards slightly. There you go. And we're touching it. That could hold. We're not oversold, so that doesn't help. We don't have a reversal. We may not close below previous important lows. That might be a little on the bullish side, but I got to start seeing it close above 300 to really get excited about meal. But beans and oil, yes, I'm starting to get excited about the long side. So I don't think meal's going to be left behind. Just not starting yet. What about corn? Oh my God. We have another bullish engulfing ER buy signal green today, period. Yesterday's low was 435 and a quarter. Today's low is 435 flat. One tick lower than yesterday's low. Definitely higher than yesterday's high. Holding higher on the day, above yesterday's high as well. About to break into some minor new highs for about a week, I expect, and it could happen yet today or real soon, Monday. This low is in a support area with oversold conditions, and a couple of days later, today, bullish engulfing, the beginning. I am now turning bullish. Fail-safe stop below today's lows. That's your maximum risk, in my opinion. Figure it out for yourself. But the upside should be at least 463, and maybe within a week or less. Then we're looking at various resistance areas to get over and above. And then we're talking about a large long-term, maybe a double bottom formation. Didn't quite get as low as I would have expected for a double bottom. But, you know, that's over almost a year's time frame, 10 months or something. So you wouldn't expect it to be exactly the same price. Closer than where it is, but bullish. Absolutely. Bullish engulfing ER buy signal, oversold conditions within the allotted number of past days, and now an official green buy, period. On our way up, in my opinion. Next, wheat. Well, I'll be damned. Oftentimes. But anyway, today's low is a new low for a couple of weeks, and it didn't stay there at all. It turned around and has a bullish engulfing. Too bad it wasn't oversold. It would have turned green like corn. But bullish engulfing's okay with me. That's a bullish indication. Support held. I'm liking this. I think we're now back up to at least 560 real quickly. And I would not be surprised to see 588-ish tested very quickly here. Maybe not next week, but within a week or two. Like it. So I've got bullish things to say, basically, about all the grains all of a sudden. Nice. Cattle dropping down, closing a gap. Told you that's likely. Now it's done deal and will pull us over. Finished, worked. Gaps are almost always closed. They're like a black hole in space. Blah, blah, blah. You've heard that 100 times. Next. Overbought and resistance. Looks like it's having some trouble, but we are at a new high potential close, but not above yesterday and Wednesday also. Overbought conditions at resistance, oftentimes, well, it's a gap closure. I think it's trying to top out. Not too sure about that. Pass. Last four for about a week. Overbought conditions, fourth day on Shell. Coming up toward previous highs, now bumping today's high against some minor important lows back when it was topping out in March. That looks like a rather idealistic spot, today's highs, to watch for maybe a high, a turn down. I'm not that optimistic yet. I'd love to see a bearish engulfing by the end of the day getting below yesterday's lows, but that does not appear to be very likely. That would turn this bar red, but not likely. And we've got a bearish engulfing on Apple. Outside down day, new low for a week or two, and it looks like a new low close also for a couple of weeks. A little bit more bearish for Apple. Only thing to watch for is, will the support hold? And that basically is 193 1/3. We might be getting oversold, or even probably closer when we get there. And I think we're going to get there pretty quickly in the first few days next week. If we close below 193.66-ish, then we're going to be coming down probably below 170. And the bullish engulfing on Tesla did work for 3 days. Yesterday was the fourth day after, third day after, so it worked for 2 days nicely, quickly. Then the third day after the bullish and green buy signal, ER signals, bullish engulfing green, we have a little dip. This morning, the little dip further came down a little bit further, and now we are almost having an outside up day, which would be great. Don't have it yet. Looks like a new high close since the bullish engulfing buy signal, and I'm happy with this. You got your original follow through, you got a little reaction, and now it looks like it's going to climb to new highs for this rally since the buy signal. And that tells me it could easily come all the way back up to 367. I think that's quite possible. And what do we got? Carvana gap down. Gaps are almost always closed. Watch for within the next week or two a move back up to the low of yesterday, which is about 318 and a couple pennies, to be more exact. It was exactly 317.75. So that would be an area to consider getting out of longs and or lightening up on longs and or maybe going short on the rally. If you're short right now, good for you, but it's getting oversold. Watch out. And you've got the gap to go back up and close. And you're coming close to a little support area. I certainly would be lowering my buy stops. And probably below today's high, in fact. But I would also want to analyze the 1-minute charts, and I don't have time for that for every chart. So we're back to the E-mini. And the 1-minute data shows us it slipped a little bit, not much. And also went up to a minor new high. That was a while ago. This is a 1-minute chart, so that's good. You guys have a great weekend, and I will be back with my YouTubes on Sunday, late morning probably, a week from this Sunday, and that will be on the 22nd of June. Have a great day and profitable trading to you.